Welcome back. You're with us on Financial Quotient, and we're discussing the checklist, the action plan that women need to keep in mind when it comes to their money and the financial standing that they have in their own families. So, ladies, back to you. You've made some fantastic points that we should all remember. Now, let's come to that action plan. Aditi, you go first. I have my notepad out. I think pen, papers, tablets. We're all listening.
First action plan for a woman, especially with all the apprehensions that you quoted, is get yourself a trusted advisor. If you can go out and get yourself a trusted jeweler, which you do, similarly, get yourself a trusted advisor. Jewelry you think is also for investments over generations. Think of it in your financial planning as well, and for your financial assets as well. Think long term. If you're thinking equity, don't get swayed by markets ups and downs. The market will go up and down. Your investment could lose up to 20%. In the long run, it has been proven though that your investment will do well if it's in equities. If you're really, really scared, make sure your risk profile, in any case rather, your risk profile should be done by your investment advisor. Know yourself before investing so you know how much risk you're willing to take. Equity can go up and down more. Fixed income is more stable, but in the long run, equities will give you better returns. Try to figure out how much you have of risk tolerance. And also, depending on your age, if you're very old, even if you want to bungee jump, and you're living on a retired salary, don't try to take too much risk. So these things a financial advisor will help you with.
Okay, got it. That's a great starting point. Jyotsna, weigh in on this. What does your checklist look like?
There are many on the checklist because I always feel that one keeps learning as we go along, right? Markets and life keeps teaching us, so we can't really stop learning. Having said that, I think for me, the first one is believe in the power of compounding. And, I often say this, and that Einstein has very rightly said that compound interest is the eighth wonder of the world, and he who understands it earns it, and he who doesn't pays it. So I think it's really important to understand that. And of course, related to that, then once you understand the power of compounding, you kind of start a little early in the day. And then, of course, this whole thing, especially when it comes to women, sometimes this topic comes up on, how much do you really spend and how much do you really save, etc. And there again, I'm hugely sort of guided by what Warren Buffett has always said, that don't save what's left after spending, spend what's left after saving. So I think that's another important thing that one must always sort of keep in mind. Risk appetite, of course, Aditi talked on, but I think that's really important and probably underestimated. That's really important for each one to know their risk appetite. Don't get too colored or worried about what others are doing. Don't try and copy their approach. Good to observe them, probably learn from other people's mistakes, but you really don't have to touch the fire to feel the heat, as they say. And know your own world. So, one size doesn't fit all. What works for you doesn't work for somebody else. And of course, we've all grown up hearing the tale of how Lord Ganesha got into a race with his brother Kartikeya, right? And, Kartikeya sort of went around the world, and Lord Ganesha just went around his parents 3 times, and he won the race. So knowing your own world is you have to be honest to yourself. That's really important. I'd say asset allocation, hugely underestimated. 2 simple words, asset allocation. And the power of this is such. In fact, there's a lot of global studies that evidence the fact that when you really look at a contribution analysis, there I go using jargon again. I'm sorry. When you really look at it and say that, what contributed to the return, more than 90% plus of the times, it is actually the discipline of sticking to asset allocation.
Sure.
2 simple words, but hand on heart, really difficult to adhere to. And again, linked to that, I'd say, the portfolio approach, don't put all your eggs in one basket. Pretty simple, like you said, no rocket science there at all. And for me, I think I would say the SIP. And when I say SIP, I'm not referring to the mutual fund kind of SIP, but I'm saying stay invested patiently. See, once you know what your financial goals are, you know what your time horizon is, etc. You make what you believe to be the right set of investments along with, advice from whoever you trust. Then after that, don't get too caught up in the headlines. I'm not saying ignore what's happening around you, but really, cut out the noise to the extent possible. Stay invested, and I think again. Leo Tolstoy in his book War and Peace has beautifully said this, that the two most powerful warriors are patience and time. And I'm a huge believer of that. So those would be some of my favorite mantras.
I think that's really, really helpful. You both have put out some amazing thoughts, very simple thoughts, and ones that are actionable. I think everybody can take something, if not everything, away from that. So really appreciate you joining in today, taking out the time and helping drive home the message that all of us women perhaps need to listen to and need to remember. Really appreciate you being on the show today, Aditi, as well as Jyotsna. Well, with that, it's a wrap on this edition of Financial Quotient. We'll see you again next week.